I want to hit on some of the things that Eunice was just talking about. China manufacturing data out this morning showing signs of contraction for a fourth straight month. We also saw a decline when it came to services and construction. Then at the same time, those Chinese internet stocks, if you use the KWEB ETF as a proxy, coming off their best week since January. Why are we seeing such a difference in the economic data and the stock performance right now? How much of that is investor confidence in those names? How much of it is it on hopes of stimulus?
Well, certainly the economic data is backward looking. And as Eunice pointed out, you're starting to see the government pivot towards supportive policies. It's still kind of early in that trend. But I also think that U.S. investors are very much underweight non-U.S. equities, including emerging markets and including China. And these companies are at deep valuation discounts. Some of that driven by U.S.-China political relations and other concerns of the past. But we're seeing green shoots on numerous fronts. And we just think this is a little bit of a reaction to this undersold, underowned, and increasingly in an uptrend situation with KWEB.
Okay. Walk me through this one, Brendan. What are the green shoots that you're seeing that you think are giving investors so much confidence? We keep hearing about the slowdown, high unemployment, especially among young Chinese people. What are the green shoots that you're seeing that give you a lot of thoughts that we're going to see a big, a sustained rebound in these stocks? We've obviously seen a rebound in the near term.
Yeah, certainly the U.S.-China political relations has kept a lot of investors on the sidelines. Obviously, Blinken, Yellen, John Kerry, Henry Kissinger in China recently. So an improvement there, right? The two sides are talking to one another. Certainly in terms of the Chinese government, right? You just had the Volkswagen Xpeng deal. Certainly that doesn't happen without government policy support. You're seeing today's NDRC, the National Development and Reform Commission, outline, as Eunice pointed out, these 20 measures to support domestic consumption. And I think you're also seeing very into earnings season for the KWEB companies in August. They've got a very inexpensive or kind of comparison from Q2 of last year. So again, you just have improvement, and there's been so much negativity built into the space. Any sort of optimism is what's really fueling this rally.
All right, so we're seeing some signs of improvement. I want to look ahead to a company reporting tomorrow outside of the tech space. I'm talking about Yum China. Obviously, their brands, which are pretty big in China at least. They have Pizza Hut and they have KFC, and then Taco Bell is growing there. What is this report? What is it going to tell us about the Chinese consumer, about consumer spending, and just the overall economic climate? Because this is obviously still discretionary spending.
Yeah, exactly. This is the part of this domestic consumption story. And just as Eunice points out, as the global economy slows, demand from the world's factory will slow. And that really explains why that we're seeing this pivot to domestic consumption. In terms of Yum China, I mean, obviously they've done very successful, very well-run company. And just to your point, it really puts your finger on the pulse of China's consumer. And again, we're looking at a year-over-year comparison when China was in really the Shanghai lockdown, 25% of GDP frozen. So we're positive, we're very constructive on the company going into the earnings season, much like the other companies within KWEB.
So if we see same-store sale growth, things like that, is that a positive sign for spending trends? Because we've heard a lot of reports that unlike here in the U.S., the Chinese consumer not as willing to keep spending and definitely not willing to spend on credit.
Yeah, certainly you're seeing scar tissue from the zero COVID policy that the consumer is coming back, albeit at a very slow, very incremental pace. But you are looking at potentially double-digit year-over-year comparisons because of the Shanghai lockdown. I think more importantly, investors will be very focused on the Q&A where the management is going to talk about their forecast. That'll be the key. Are things improving? And we suspect with all this emphasis on domestic consumption, domestic travel, domestic tourism from the government, that should be a good read for Yum China. It should be a positive for the company.